Right now, as you're watching this, there's an institution that controls the value of every dollar in your wallet. It decides whether your mortgage payment goes up or down. It can create trillions of dollars out of thin air with a few keystrokes. And it's more powerful than the president, Congress, or any government agency. Most people have no idea it exists. The ones who do don't understand what it actually does. And that's exactly how it was designed. I'm talking about the Federal Reserve. And its origin story reads like a conspiracy thriller because it actually is one. Secret meetings on a private island. A cabal of the world's richest bankers writing legislation in complete secrecy. A bill passed on Christmas Eve when most of Congress was gone. And a system that has controlled American money for over a century. By the end of this video, you're going to understand who really controls your money, why they have that power, and what it means for your financial future. Because once you see how the system actually works, you can never unsee it. This is the story of the Federal Reserve, the most powerful institution you've never understood. November 1910. A private railroad car leaves New York City in complete secrecy. Inside are 6 men. They use only first names. No last names, no titles. They tell no one where they're going. These 6 men represent 1/4 of the world's wealth. If anyone knew they were meeting together, it would cause a panic. Stock markets would crash. Governments would investigate. So they travel in secret to a private island off the coast of Georgia. Jekyll Island, a resort for America's richest families. For 9 days they work in complete isolation. Writing, planning, designing. What they create on that island will change the world forever. It will give them control over America's money supply. It will allow them to create economic booms and busts. It will make them more powerful than any king or emperor in history. And for over a century, it will control your life in ways you never realized. This is where it started. Let me set the scene. America in 1910 is terrified of banks. Why? Because banks keep failing. Savings disappear. Economic panics happen every few years. The panic of 1907 was the worst yet. The entire financial system nearly collapsed. Americans blame the banks, and they're not wrong. Banks were making risky loans, speculating with depositors' money, and when things went bad, ordinary people lost everything. There's massive public anger. People are demanding government control over banking. Some are even calling for the government to take over banking completely. The big bankers have a problem. They know some kind of banking reform is coming. But they don't want government control. They want to control it themselves. So they come up with a plan. A brilliant, audacious plan. They're going to create a central bank. Make it look like a government institution, but structure it so they control it. But they need secrecy. If the public finds out that bankers are writing banking legislation, there will be riots. Enter Senator Nelson Aldrich, chairman of the Senate Finance Committee, one of the most powerful politicians in America. Also, he's connected to the Rockefellers through marriage. Aldrich organizes the secret meeting. He invites 6 men to Jekyll Island. 1, himself, Senator Nelson Aldrich, representing the political establishment. 2, Frank Vanderlip, president of National City Bank, the largest bank in America, representing the Rockefeller interests. 3, Henry Davison, senior partner at J.P. Morgan Company. 4, Charles Norton, president of First National Bank of New York. 5, Benjamin Strong, another Morgan lieutenant who would become the first head of the Federal Reserve. 6, Paul Warburg, a partner in Kuhn, Loeb and Company, representing the European banking families, particularly the Rothschilds. These 6 men represented the biggest banks in America and their European backers. Together, they controlled more wealth than most countries. They traveled to Jekyll Island separately to avoid suspicion. They used only first names. They told staff they were going duck hunting. For 9 days they worked, writing, debating, designing a system that would give them control over America's money. What they created was genius, diabolical genius. They designed a central bank, but they didn't call it that. Americans hated the idea of a central bank. The first and second banks of the United States had both been killed by populist anger, so they called it the Federal Reserve System. Federal made it sound like a government agency. Reserve made it sound safe and conservative. System made it sound decentralized and democratic. But here's the trick. It's not federal. It's not really a reserve. And it's not a democratic system. The Federal Reserve is a private corporation owned by member banks. Yes, you heard that right. The institution that controls America's money is privately owned by the banks it's supposed to regulate. The president appoints the board of governors. But the real power lies in the 12 regional Federal Reserve banks, which are owned by private banks. It's the most brilliant scam in history. Create a private institution, give it government authority, and make it look like it's serving the public interest. After 9 days they had their plan. They returned to their lives and began the political campaign to make it reality. But they had a problem. How do you get Congress to approve a central bank when Americans hate central banks? The bankers spent 3 years lobbying, bribing, and manipulating politicians. They needed the right moment to pass their legislation. And then it came. December 23, 1913. Most of Congress had left Washington for Christmas. The chambers were nearly empty. That's when they struck. They pushed the Federal Reserve Act through Congress in a nearly empty session and got President Woodrow Wilson to sign it the next day. Christmas Eve, 1913, the Federal Reserve was born. But what most people don't know is what Wilson said about it years later, and it's absolutely chilling. The Federal Reserve Act passed on December 23, 1913. By Christmas Eve, it was law. Years later, President Woodrow Wilson allegedly said, "I am a most unhappy man. I have unwittingly ruined my country. A great industrial nation is now controlled by its system of credit. The growth of the nation, therefore, and all our activities are in the hands of a few men." Whether he actually said exactly those words is disputed, but the sentiment is accurate. Wilson came to regret signing the Federal Reserve Act. But what is the Federal Reserve? What does it actually do? Here's what they tell you in school. The Federal Reserve is America's central bank. It manages the money supply, sets interest rates, and stabilizes the economy. It's independent from political pressure, so it can make sound economic decisions. That all sounds reasonable, right? Professional, necessary. Here's what they don't tell you. The Federal Reserve has the power to create money out of nothing. It can literally add zeros to a computer and create trillions of dollars. And it's accountable to no one. Congress can't audit it fully. The president can't fire the chairman without cause. It operates in secret. Its meetings are closed. Its decisions are announced, not explained. Let me break down how it actually works, because this is where it gets wild. The Federal Reserve controls 3 main things. 1. The money supply. How much money exists in the economy. 2. Interest rates. How expensive it is to borrow money. 3. Banking regulations. The rules that banks have to follow. When the Fed wants to stimulate the economy, it creates money. Not by printing physical bills, though it does that too. Mainly by adding digital zeros to bank accounts. This is called expanding the money supply. They buy government bonds or other assets from banks, and in exchange, they credit the bank's accounts with money that didn't exist before. Boom. New money, created from nothing. When they want to slow down the economy, they do the opposite. They sell bonds, take money out of circulation, and make it disappear. They also control interest rates. When you hear the Fed raised interest rates or the Fed cut rates, they're talking about the federal funds rate. This is the rate banks charge each other for overnight loans. But this rate affects everything: your mortgage rate, your credit card rate, your car loan, business loans, everything. When the Fed lowers rates, borrowing becomes cheap. People and businesses borrow more, spend more, invest more. The economy grows. When the Fed raises rates, borrowing becomes expensive. People stop spending. Businesses stop investing. The economy slows down. The Fed claims it does this to maintain stable prices and maximum employment. The dual mandate. But here's what actually happens. The Fed creates cycles, booms and busts. They lower rates, create cheap money, inflate bubbles. Then they raise rates, pop those bubbles, create recessions. And who benefits from these cycles? The banks. The same banks that own the Federal Reserve. When there's cheap money, banks lend like crazy and make huge profits. When there's a bust, the banks that are too big to fail get bailed out by the government. Smaller banks fail, and the big banks buy them up cheap. It's a system designed to concentrate wealth and power in the hands of the largest banks. So how did this system work in practice? Let's look at the biggest economic disaster in American history, the Great Depression. The story you learned in school is that the stock market crashed in 1929 because of speculation and greed. Banks failed. People lost their savings. It was a natural disaster that the government eventually fixed. But that's not what happened. The Great Depression was created by the Federal Reserve, and I can prove it. The Roaring '20s. The economy is booming. Stock market going up. Everyone's making money. Life is good. Why? Because the Federal Reserve is keeping interest rates low. Money is cheap. Credit is easy. People are borrowing to buy stocks. Banks are lending like crazy. The Fed is inflating a massive bubble, and they know it. In 1928 and 1929, the Fed suddenly changes course. They raise interest rates dramatically. They restrict the money supply. The bubble pops. The stock market crashes in October 1929. But here's the thing. Stock market crashes don't cause depressions. They happen all the time. Markets recover. What caused the Great Depression was what the Fed did after the crash. Instead of adding money to the system, they contracted the money supply. By 1933, the money supply had shrunk by 1/3. Think about that. 1/3 of all money in circulation just disappeared. Banks failed, not because they made bad loans, though some did, but because there wasn't enough money in the system. When people tried to withdraw their savings, the money didn't exist. Economist Milton Friedman, who studied the Great Depression extensively, said the Fed turned a garden-variety recession into a catastrophic depression. They did this. On purpose or through incompetence, the result was the same. Millions of people lost everything. And who benefited? The biggest banks. J.P. Morgan, Chase. The banks connected to the Federal Reserve System. They survived. They bought up failed banks. They consolidated power. By the time the Depression ended, banking in America was more concentrated in fewer hands than before. Fast forward to the 1970s. Inflation is out of control. Gas lines, prices doubling. The economy is a mess. Why? Because the Fed printed too much money to pay for the Vietnam War and Great Society programs. They inflated the money supply, and the result was inflation. Then in the 1980s, Fed Chairman Paul Volcker had to crush inflation by raising interest rates to 20%. 20%. Mortgages were 18%. The economy went into a severe recession. Unemployment skyrocketed. But inflation finally came down. The 1990s and early 2000s. The Fed keeps rates low. Alan Greenspan, the Fed chairman, is called the maestro. Everyone thinks he's a genius. But what's actually happening? He's inflating bubbles. First the dot-com bubble. When that pops in 2000, he responds by lowering rates even more. This inflates the housing bubble. Banks are giving mortgages to anyone with a pulse. No income verification. No down payment. Adjustable rate mortgages that will explode when rates go up. The Fed knows this is happening. They're causing it with low rates. But they do nothing. Then in 2006, 2007, they start raising rates. The housing bubble pops. Banks start failing. And in 2008, the entire financial system nearly collapses. The Great Recession. Millions lose their homes. Millions lose their jobs. Retirement accounts are cut in half. Middle-class wealth is destroyed. And what does the Fed do? They bail out the banks. The same banks that caused the crisis. The same banks that own the Federal Reserve. They create trillions of dollars out of thin air. Quantitative easing. QE1, QE2, QE3. They buy toxic assets from banks at full price. They give banks virtually free money. Did they bail out homeowners? No. Did they bail out people who lost their jobs? No. They bailed out banks. And it gets worse. You think 2008 was bad? That was nothing compared to what happened in 2020. When COVID hit, the Federal Reserve did something unprecedented. Something that would have been unthinkable even 10 years earlier. They printed more money in a few months than had existed in the entire previous history of the United States. Let that sink in. More money created in months than in over 200 years. And the consequences? We're living them right now. March 2020. The pandemic hits. The economy shuts down. Stock market crashes. Panic everywhere. The Federal Reserve's response? Print money. Lots and lots of money. In the span of a few months, the Fed created over $4 trillion. They bought government bonds. They bought corporate bonds. They even bought junk bonds from failing companies. The money supply exploded. The M2 money supply increased by 40% in less than 2 years. This had never happened before, even during World War II, even during the Great Depression. Nothing like this. The Fed claimed it was necessary to prevent economic collapse. And maybe it was. But the consequences were predictable and devastating. When you increase the money supply by 40%, you get inflation. Period. That's not economic theory, that's basic math. But the Fed denied it. In 2021, Fed Chairman Jerome Powell kept saying inflation was transitory, temporary, it would go away on its own. He was either lying or incompetent, probably both. By 2022, inflation hit 9%, the highest in 40 years. Everything got more expensive. Gas, food, rent, healthcare, everything. Your savings lost value. Your paycheck bought less. The cost of living went through the roof. And who benefited? The wealthy. The people who own assets. The people who own stocks, real estate, businesses. When the Fed prints money, it doesn't go to ordinary people. It goes to banks first. Those banks lend it to big corporations and wealthy investors. They buy assets. Asset prices go up. If you own assets, you get richer. If you only have cash savings and a paycheck, you get poorer. This is called the Cantillon effect. Money created by the central bank doesn't affect everyone equally. The people closest to the money printer benefit most. Everyone else pays through inflation. The Federal Reserve has created the largest wealth gap in American history. The rich are richer than ever. The middle class is struggling, and the Fed is the primary cause. But it gets even more insane when you zoom out and look at the global picture. The Federal Reserve doesn't just control American money. Because the dollar is the world's reserve currency, the Fed effectively controls the global financial system. When the Fed prints dollars, it affects the entire world. Developing countries that borrow in dollars suddenly find their debts more expensive. Countries that trade in dollars have to deal with inflation they didn't cause. The Fed can destroy foreign economies with a single decision. Raise rates too fast, and countries that borrowed in dollars can't pay their debts. They go bankrupt. Argentina, Turkey, Lebanon, Pakistan, all casualties of Fed policy. This is financial imperialism. The Fed is more powerful than any army. It can conquer countries without firing a shot, simply by manipulating interest rates and money supply. So we've established that the Federal Reserve is incredibly powerful. It can create money, cause inflation, trigger recessions, destroy entire economies. But here's the question nobody asks. Who controls the Federal Reserve? The textbook answer is, it's independent. It's run by expert economists who make decisions based on data, free from political pressure. That's the story they tell you. But it's not true. Not even close. So who really controls it? The answer is going to shock you. Let's talk about the structure of the Federal Reserve because this is where the scam becomes obvious. The Federal Reserve System consists of 3 parts. 1. The Board of Governors in Washington, D.C. 7 people appointed by the President and confirmed by the Senate. They serve 14-year terms. The chairman serves a 4-year term. 2. 12 regional Federal Reserve banks located in cities across America, New York, Chicago, San Francisco, etc. 3. The Federal Open Market Committee, the FOMC, which actually makes monetary policy decisions. It consists of the Board of Governors plus 5 regional bank presidents. Now here's the key. Those 12 regional Federal Reserve banks, they're private corporations. They're owned by the commercial banks in their districts. That means private banks own the Federal Reserve banks. The banks that are supposed to be regulated by the Fed actually own parts of it. It's like letting the prisoners own the jail. The regional Fed banks issue stock to member banks. Member banks receive dividends on that stock. A guaranteed 6% return, paid from Fed profits. Who are these member banks? J.P. Morgan Chase, Bank of America, Citigroup, Wells Fargo, the biggest banks in America. These banks own the Federal Reserve. They profit from the Federal Reserve, and the Federal Reserve regulates them. Does anyone else see the problem here? Now, defenders of the Fed will say, But the Board of Governors is appointed by the President. It's accountable to the public. Really? Let's look at who actually gets appointed to the Fed. Fed chairman over the last 40 years. Paul Volcker, previously at Chase Manhattan Bank. Alan Greenspan, economist for J.P. Morgan. Ben Bernanke, academic but picked by banking interests. Janet Yellen, another academic approved by banks. Jerome Powell, former partner at the Carlyle Group, a massive private equity firm. Every single one has deep ties to the banking industry. Every single one came from or went to work for major financial institutions. The revolving door between the Fed and Wall Street is wide open. And here's the kicker. The Fed doesn't really answer to anyone. Congress can hold hearings, but the Fed isn't required to follow congressional directives. The president can't fire a Fed chairman except for cause. The courts have no jurisdiction over Fed policy. The Fed operates in secret. Its meetings are closed. Transcripts are released years later. Its decisions are announced as fait accompli. Congress attempted to audit the Fed multiple times. Ron Paul introduced the Audit the Fed bill repeatedly. It never passed. Why? Because the banking lobby kills it every time. The Fed's excuse is that it needs independence to make tough decisions without political pressure. But what they really mean is, they don't want oversight. They don't want transparency. They don't want anyone seeing how the sausage is made. And what about the New York Federal Reserve Bank? This is the most powerful of the 12 regional banks. It conducts all open market operations. It's the Fed's interface with Wall Street. The New York Fed is run by Wall Street bankers. Its board of directors includes executives from J.P. Morgan, Goldman Sachs, and other major banks. In 2008, when the financial crisis hit, who decided which banks to bail out? The New York Fed. Who decided how much money to give them? The New York Fed. Who was running the New York Fed at the time? Timothy Geithner, who then became Treasury Secretary. The same people who caused the crisis were put in charge of fixing it. And they fixed it by giving themselves trillions of dollars. This isn't capitalism. This isn't a free market. This is a rigged game where the House always wins because the House controls the money supply. So what have we learned? The Federal Reserve was created by bankers in secret to serve bankers' interests. It's a private institution with public authority. It creates money from nothing and lends it to the government at interest. It causes boom and bust cycles that destroy the middle class while enriching the wealthy. It operates with no real oversight or accountability. This isn't a conspiracy theory. This is documented history. The Jekyll Island meeting happened. The Christmas Eve passage happened. The revolving door between the Fed and Wall Street is real. The bailouts happened. The money printing happened. It's all real. And here's what it means for you. Every dollar in your wallet is worth less every year because the Fed keeps printing more. Your savings are being quietly confiscated through inflation. Your purchasing power is declining while asset prices that rich people own keep going up. The system is designed to transfer wealth from working people to the financial class. And the Federal Reserve is the mechanism that makes it possible. So what can you do about it? First, understand the game. You can't win a game you don't understand. Now you understand that inflation isn't random. It's policy. Recessions aren't accidents, they're engineered. Second, protect yourself. Don't keep all your wealth in cash that's being devalued. Own assets, real estate, stocks, commodities, things that hold value when currency doesn't. Third, demand accountability. Support politicians who want to audit the Fed. Transparency is the enemy of corruption. The Federal Reserve is the most powerful, unelected institution in America. It controls your financial future more than any politician ever will. But now you know. You understand how the system works. You see who pulls the strings. And once you see it, you can never unsee it. The Federal Reserve, the secret power behind your money. The institution that was created in darkness and operates in shadow. The ultimate proof that in the modern world, whoever controls the money supply controls everything. If this opened your eyes, share it. Because the more people who understand how the system actually works, the harder it becomes to keep running it in secret. The Fed's greatest weapon has always been ignorance. Now you're not ignorant anymore. Welcome to reality. It's more interesting than you thought.